Hello, what's going on everyone? This is Blue Vein with Profiteer Trading, and today I wanted to come out with a video explaining to you guys how I use TPO or market profile charts to find trade opportunities within the market. So what you're seeing right now is the E-mini S&P 500 contract. This is the TPO chart for it. It's a daily TPO based off of 30-minute blocks. So essentially what that means is that the light blue block here, that's the open, and for every 30 minutes there's a different shade of blue, and it'll print up and down where we spend time, and then every 30 minutes there's a new block color, new block color. So if I split it up, you can see we opened here, spent 30 minutes puttering around, and then we pushed up, came down, pushed up, tested a high, failed, stayed rotational for a while, and then closed within the prior day's value area. These gray lines, what I mean by value area, it's simply 70% of where we spent time. So 70% of that session was spent in this distribution. Now, one of the best ways I have found to use these charts is to compile them. So as you can see, pretty much right here we have this very big block where we didn't really trade much direction. And this was a fresh low, so the entire value area is outside of the prior one, so I wouldn't consider that. And this was a trending day, so I don't really want to look at that too much. However, you can see prior point of control, point of control, point of control, especially these 3 days in particular. This is something that I would consider merging, so we can merge these together and get this distribution where we can see where value had been established. If you wanted to bring this one in, it'd be a little bit, but we can see what it looks like. Yeah, this is two separate distributions because you have such a gap here. Regardless, we can go ahead and see what all went down. Actually, I'd like to let's just look at this. 2.5, boom. All right, so we had identified those two merge for sure. This one, it's a little out of there. And then look at 10.9. So on 10.9, we opened at the top of that value area. We pushed down below, went to go retest it, failed, broke back in, tested the high. We couldn't really get that much out. And then as soon over here, this was the overnight, just so for some clarity, just so you all know what was going on. This was actually the overnight session, and this was when there was a bunch of headlines. So if you remember that from a few days ago, it was like Globex Open, headline, boom, headline, boom, headline, boom, headline, boom. And then the rest of the night, it was just kind of quiet. So that's some of the reason for this distortion right here. However, what I'd like you to pay attention to more is what we saw when this happened. So look at this prior value area. Look at these lines right here. This is an established value area, and this one right here is a value area, right? It's that shelf. So we're puttering around, we test it, we fail. We come up, we test it, we fail. We come up, we accept, we break through, and as soon as we're accepted above this value distribution, you're looking for a previous value distribution to go into, which is what we ended up doing. So we pushed up, came down, and ended up accepting into this value area right here. And then if we continue going on, we're chugging around, we're doing our thing in this value area, we break out, we have a failed breakout. Well, actually, this would be we push out, we come back in, we push out again, we come back to right here. So you can see this, we had a failed breakout. It looks that was overnight because that's the close, the open. So the Asia session, they had a failed breakout. We push up, and this is and then we push back in, come down here. We're retesting that value area high from before over here, and then we ended up pushing up to create these new highs. Here's another example, and this will be interesting to look at here. So again, when you have these balance days, they can be very good to merge. So let's just actually bring all of this back to normal, and we'll just put boxes around all of these so we can get an idea of what I'm talking about. Okay, so we've got this composite value area formed of those 2 days we merged. We've got this prior value area from that kind of shelved off day. And then we have this big distribution over here that we want to pay attention to as we push back up, because we were in this distribution, we failed and went and balanced down, which is what caused that balance down here. And now we're chilling up here. So if we look at this distribution to see how price responds, again, overnight headline news, we push out, we accept outside of this value area. And where's the next target? We push right into this prior value area, retest it, accept within this prior value area, and shoot right to that value area high. So once you get to the high, it got rejected, came back down, tried to get below, couldn't, and then we, boom, pushed right back up to the value area high. So you can see how these things kind of act as magnets, where as soon as you're accepted out of one, your next target is typically one of those prior ones we saw. So again, with this example of prior areas, so now we broke out of this value area, and there wasn't really anything until we got to that distribution. So we popped into that distribution, held inside of it, time acceptance, had a few peeks out to see if we could find any sellers. We couldn't, and boom, we brought it right back up to the value area high, down to the value area low, back to the value area high, down to the value area low. So you can see how knowing these numerics, knowing where this value area low is, knowing where these distributions are formed can be extremely beneficial to you in your trading, because you know where we lie. You know, if we're trading down here and we accept outside of this area, the next probable target is going to be one of the prior value areas, which happened to be this one right here. As soon as we were up in here, we knew as soon as we were able to pop out and hold above outside, we were going to probably go to the next value area. And again, this was a trending day, so you don't want to count it. This would be our composite value area, and we ended up shooting right into it on Friday. So again, this isn't supposed to be a full-blown market profile course. This is just simply showing you how they can be used. Again, look at this. We have some more days you could consider merging to form other value areas and an established context. But they're very, very useful for determining context and narrative of the market, trying to see where are we contextually within the bigger time frame of things. And that can be an incredibly powerful factor when you are trading. If you know we just broke out of this value area and accepted above it, you're looking to be a bull. Even though you're buying at the top of the day, you know that there's nothing, there's a gap, there's nothing in here. No one was wanting to facilitate trade, and we're probably going to return back to where that trade was being facilitated, up in here. Every time we got into this area, there's not much participants. We don't stay down here for long. It was a gap. So as soon as we were able to push out and accept above, we shot right into that next value area. And that is one of the key ways that I use these charts to then generate conviction on trade ideas. Hope you learned something, and I will see you all in the next one.